would be nice.
That's pretty sweet.
Yeah.
For more on this, let's bring in Michael Sonnenschein. He's the managing director of Grayscale Investments, the largest asset manager in the digital currency space. They created the Bitcoin Investment Trust and the 4 new single currency funds you just heard about. Michael, welcome to the show.
Thanks for having me.
What sort of investing gap do these products fill? Why wouldn't I just buy with no limitations in terms of me being accredited or the minimum amount I could put in or the vesting period? Why wouldn't I just buy the digital currency?
Sure. So Grayscale has been at this actually since late 2013. We recognized that investors wanted exposure to digital currencies. Digital currencies are not like stocks and bonds and all the other things that you buy. There's certain technological prowess that people need to have to handle them, store them securely, et cetera. And so by launching products that allow people to gain the exact same exposure, but through the purchase of a security, well, all of a sudden it becomes something that people can really wrap their heads around. And particularly for institutional investors, which is where probably most of our flows have come from recently, custody is a big issue for a lot of these institutions. And when you start involving the chief risk officer, the lawyers, the accountants, et cetera, having a product with a CUSIP that's audited is something that really checks a lot of the boxes for them.
So, Michael, you mentioned something that we've talked about a lot here, is this institutional money coming in. I've heard both sides of it. The institutions want nothing to do with it, and then, yes, they're actually looking for a way to get into it. From where you sit, it sounds like they're using your products to get into this.
They are. So Grayscale now has about $2 billion in assets under management across 8 different products. 7 of them are single currency vehicles, and then, as Bob just reported, we have a diversified offering, the Digital Large Cap Fund. And so a lot of institutions probably about 18 months ago started reaching out to us saying they want exposure to the space, and everybody had a different reason for it. Maybe it was digital gold, maybe it was starting to impact other technology investments they had, healthcare. It really runs the gamut. And we're seeing flows from everyone from value investors, technology investors, global macro investors. It's really across the spectrum.
Are investors...
My personal opinion, and like I said, if you're a younger generation, if you're a millennial, I think you should actually own the currency. I think if you're someone that doesn't want to embrace new technology, doesn't really want to learn, then I think we need the institutional route, and I think it's good for people that don't want to deal with it, because there are security issues that you have to deal with when you own the currency yourself, and giving it to a money manager that will balance your portfolio. You don't have to worry about stocks, and obviously you're going to pay a fee, so you have to be okay with that. I don't think they mentioned that, which is pretty important, is that you can always go the institutional route and have a money manager do your crypto investing for you. And if you're an old person that hates technology and doesn't really want to learn, then that is the route to go. And then obviously if you're investing with like your IRA or a retirement account, sometimes there's limitations, and it might be easier to just go through some big fund like this. So yeah, go ahead. But if you're a savvy investor, if you're someone that wants to learn, and I feel like if you're already on YouTube watching this channel on cryptocurrency, you're probably not that person. I think you're the latter. So I think you should go learn, and maybe just start small with some small investments. Learn how to basically keep your account secure. If you do start going over $20,000, that's where you have to start reporting your taxes to Coinbase and stuff like that. Then you might want to have some money in institution, because like I said, I would never ever, my personal opinion is never have more than $10,000 on any wallet or exchange in case you get hacked. And in fact, if you're conservative, I wouldn't go over 5,000. So just have different wallets, different exchanges. And like I said, if you're a big boy, you got 50, 60, $100,000 you want to invest, then, putting some money in one of these managed funds, I don't think it's a bad idea, just because, just the extra security. And so what, you're paying them a fee, but they're going to take care of some stuff for you. But I wouldn't miss out on the opportunity of learning how to use the coins, how to send the coins. I mean, I just think there's so many great things about cryptocurrency where there's a benefit to owning it, and you're not going to learn any of this if you don't own it. So yeah, there might be all these products and they're great, and if you're a baby boomer and you're in your 50s, 60s, 70s, you don't want to deal with it, then I think this products they have is great. But if you're you're a younger person, you're watching YouTube, you're all about like educating yourself and learning, own some currency. And then, like I said, if you have large sums of money, you probably want to spread that around and not have it all in one wallet and putting some money into one of these institutions might be the way to go. But let me know what you guys think, and thank you for watching. And I will keep trying to keep posting your comments so I can keep producing material that's good for you guys. And thank you for watching, and I will talk to you guys soon.